Hello everyone, welcome to Global Government News. Today is Thursday, December 2nd, 2010. I'm Darko. Welcome to this economic news bulletin. New listeners or new viewers, please visit my website at www.ggnonline.com. That's ggnonline.com. Alright, we're going to start with this. I have a lot of news to cover today. It'll most likely be in two videos. But as always, the links will be posted in the video's description. So this first one up is Wall Street rallies as Euro concerns ease and data eyed. Yeah, these first couple articles are going to be very hunky-dory. Everything's good. Everything's great. Don't worry. Everything's going to be okay. Wall Street rallied for a second day on Thursday as concerns about Europe's sovereign debt crisis waned, giving investors a chance to add to positions in winners among banks and retailers. It says more than two stocks rose for every decliner on the New York Stock Exchange, with bank stocks leading the way after Goldman Sachs said improving economic conditions will favor that sector. It says here the fears have been centered on Europe that seems to have stabilized, and now the focus is on the domestic and international growth, and will look, that's what it will look like basically. It says retailers' shares rose on stronger than expected November sales data, which reflects a healthy start to the holiday shopping season. Yeah, if you checked out that video, you can see all the people going, I guess you can call them people, squeezing their way through the doors of Target to get their cheaply made goods from China. So everything's going well. Everything's really great. Stock surge wipes out November's decline. Global financial markets rebounded on Wednesday as soothing news out of China, Europe, and the U.S. restored confidence in the world's economic recovery and brought temporary relief to fears about a debt contagion in the Eurozone. So it says in the U.S., the Dow Jones Industrial Average kicked off December, often one of the strongest months of the year, with its best days in 3 months, actually adding 249.76 points, or 2.227%. It says it was the Dow's sixth largest point and percentage gain this year. Moving on, data shows fresh signs of improving economy. Fresh signs of the U.S. economy has broken out of its summer soft patch emerged on Thursday as data showed a gauge of jobless benefits hit a new two-year low last week, and pending home sales unexpectedly rose in October. And here we go. This is pretty much the last of the good news that you're going to get. Two-year low for layoffs hints at hiring pickup. Economy appears headed for the strong finish this year. This is from the AP. It says November marked a two-year low for the number of Americans applying for initial unemployment benefits, suggesting that, it doesn't actually mean, it's just saying that it suggests that the tight job market might be easing at last. The slowing of layoffs and a solid month for retailers are the latest evidence of a strengthening economy in the final months of the year. Even the struggling housing market showed signs of improvement on Thursday. It posted a third straight monthly increase in signed contracts for home purchases. So here we go. Dollar's dominance soon will be over. This is from November 28th. I've collected a bunch of different news articles that relate to the economy. So some of them may be from a couple days old, but either way, it's still relevant. And this one says business analysis indicate that the U.S. dollar status as the world's reserve currency and the standard currency could be soon coming to an end. It says here, this comes days after China and Russia decided to renounce the U.S. dollar and resort to using their own currencies for bilateral trade. And it goes on here, it says about trade settlement, we have decided to use our own currencies. That was a quote from the China Daily, quoted Russian Premier Vladimir Putin as saying in a joint news conference with his Chinese counterpart Wen Jiabo in St. Petersburg on Tuesday. Gold rises over 1% on Eurozone debt worries. This is from the 30th. It said, so it may have changed, but it says gold rallied more than 1% on Thursday as a sharp decline of the euro and signs of a deepening Eurozone's debt crisis prompted investors to buy gold to hedge against currency and economic uncertainties. It says here, coming soon, the loud thud of a gold burst. Sometime in the future, the price of gold will crash, and it won't have a fairy tale ending for the millions of investors who piled on in the recent months. Next one up is oil. Oil ends at a 25-month high on weak dollars, U.S. data. It says here, oil prices rallied on both sides of the Atlantic on Thursday and ended at their highest levels in 25 months. as a weaker dollar prompted investors to buy riskier assets such as oil and other commodities. Okay, here we go. Americans would rather cut services than raise taxes to balance budget, poll says. This is from the AP. To ease surging budget deficits, Americans prefer cutting federal services to raising taxes by nearly 2-1 in a new poll, yet there's little consensus on specific meaningful steps and a wariness about touching two gargantuan programs, Social Security and Medicare. And I was just reading an article about Barack Obama is basically going to be messing with the veterans' benefits. I guess it's a system or a program called TRICARE, and veterans are, I guess, up in arms about having to have more of a copay, a higher copay, possibly just basically getting less services. And I have the VA. I don't really use it at all anymore. I mean, once I realized that they're just there to give you pills for the big pharma companies, and they're not there to actually help you. I stopped going there, and I'll just basically use that for emergency services, and that's pretty much it, and try to keep as healthy as I possibly can. But I don't want to go in that building, man. It's just straight up eugenics. So we're going to keep moving on here. And we're going to cover also as far as the benefits being cut and unemployment later. It says House approves middle-class tax cuts. So more good news, guys, right? The U.S. House of Representatives approved legislation to make permanent tax cuts only for households earning less than $250,000, a symbolic vote aimed at stiffening the spine of Democratic negotiators as the expiration of tax cuts draw near. It says the vote was 234 to 188, with 20 Democrats joining Republicans in opposition to the bill. Next one up, mortgage rates rise for third week. Rates on fixed-rate home mortgages rose for the third week in a row, following bond yields higher after economic data suggests that the economy might be stronger this quarter, Freddie Mac said. Oh, Freddie Mac said, huh? It's a real reliable source. But, yeah, it said the rate on the 30-year fixed-rate mortgage averaged 4.46% for the week ending December 2nd, up from 4.40% last week, according to Freddie Mac's weekly survey of conforming mortgages rates. Said the mortgages averaged 4.71% a year ago. Moving on here, pending sales of U.S. existing homes rises a record 10%. So I guess more good news, right? Everything's good. Pending sales of U.S. existing homes unexpectedly jumped by a record 10% in October, indicating the industry at the center of the last recession is stabilizing as the job market improves. Ooh. Home prices falling faster in most metro areas. This is from the AP. Home prices are falling faster in the nation's largest cities, and a record number of foreclosures are expected to push prices down further through next year. Next one is home prices again. Slump in housing prices deepens. This is from the Wall Street Journal. The U.S. housing market is showing signs of falling deeper into a slump that could weigh on the nation's economic recovery. Home prices nationwide were down 1.5% in the third quarter compared with a year ago, according to the S&P Schiller Home Price Index released Tuesday. The drop reflects the sharp fall in home sales after government home buying tax credits expired earlier this year, and I don't even really think that helped too many people. They were basically told by the federal government if they wanted to be eligible for this program, they had to stop making payments or pay less, and then they actually had to foreclose on their home. That was based off that interview that a panel. It was a congressional panel with that Georgetown professor was talking about basically all the big banks, the big four mostly, all being insolvent, and that they were holding off on their foreclosures so that they can remain, quote, solvent, even though they're all insolvent anyways. It says prices fell even more by 2% in the third quarter compared with the second quarter. Foreclosure restarts limp out of the gate, of course, right? This is what I was just talking about. And this is from the 27th. Bank of America Corp. and J.P. Morgan Chase and Company have hit snags in efforts to restart nearly 230,000 foreclosures. I wonder why that is across the U.S., meaning some cases are likely to remain in limbo until earlier next year. Rents reach three-year high. Rents are rising at their fastest rate for 3 years as demanded for homes to let continues to soar. Research showed today around 39% more surveyors reported seeing a rise in rents during the third quarter than those that saw a fall, the highest level since the second quarter of 2007. Said the group said the strong increase in rents was being driven by growing demand for rental property as potential first-time buyers continued to struggle to secure a mortgage and raise the deposit they needed to get on to the property ladder. So not good for renters. I'm a renter. Says U.S. Congress slams door on the unemployed. On Wednesday, 800,000 unemployed U.S. workers woke up in the morning having lost for most what is their only source of income, jobless benefit checks that average about $300 per week. By Christmas, another 1.2 million workers will follow them into the cashless economy, where they will join the far larger number of jobless workers who receive no benefits at all. Millions more will follow next year. The cutoff came after Congress failed to reauthorize a program that extends jobless benefits beyond the 26 weeks afforded by most states. Leading congressional Democrats have indicated that the benefits might not be restored for months, if ever. Moving on here, U.S. jobless claims see unexpected rise. Applications to begin receiving unemployment benefits in the U.S. have climbed more than forecasted, indicating the labor market will need more time to improve. And just remember when we were talking about the earlier article, where all the positive news was in the beginning of this video, it said, "Ooh, jobless claims are down," and all that. That's what I was getting at when I said, suspected or the word, whatever word that they used. The point that I was trying to make was that they try to manipulate data, or they try to not really give you the full story, because there's a lot of people, like the story that I just covered, this one, where they're no longer eligible, so they're not on unemployment benefits, so they just get knocked off that unemployment rate. Oh, they must be working. Well, no, they're not still working. They just aren't getting any money. They hit that 26-week market. So a lot of different ways to manipulate that data to make it seem as if everything is recovering and everything is good. And they're putting this out too because, basically the Irish people and their government are basically going to be forced to take these loans by the IMF, and so they basically are getting bought out. And the IMF is just going around, and they're going to do this, and that's what the whole scam was all about. You can say it's about greed and not enough oversight, enough government oversight, and the market was too free and all that other stuff. But everything is going according to plan. Consolidation is taking place, and good, healthy, solvent institutions are going under. The Federal Reserve has gotten dictatorial powers. The FDIC too. They're just going around shutting down banks that are still solvent, or are only affected because of all of the crimes that were committed, the frauds that were committing on Wall Street and that. And that's why certain companies out there, they just keep going, like Freddie Mac and Goldman Sachs and GM. They never go under because they're part of the establishment. They're part of what everybody calls the military-industrial complex. It's a nice big corporatist economy, and if you're not part of the group, then you go under. So it's not a free market. I think most of you are aware of that. I'm going to move on here. Bernanke warns of long-term joblessness, and this is a story that kind of went under the radar. It said Federal Reserve Chairman Ben Bernanke warned on Tuesday that a long period of high unemployment could exact a steep social cost, as he and other Fed officials defended the central bank against criticism of its easy money policy. And you can be rest assured, guys, that the federal government is aware of what's going on, and that they are preparing with the National Guard, Homeland Security, even working with other countries, having detachments from Serbia, Croatia, Bosnia. They all have one country for each state, and they will be ready for when the hoopleheads basically take to the streets and start damaging private property, and then they start calling it anarchism. So they're all ready. They have all the gadgets. They just talked about this new gun that the troops in Afghanistan are going to have. That's not for them. That's for you. That's for patriots. That's for all of you that are going to try to fight this at the last minute when it's too late. You're going to try to use violence to fight violence, and it ain't going to work. So please join me in part 2 of this economic news bulletin, and we'll get more into it. I got a lot of news to cover still. So thank you for joining GGN. I'm Darko. Take care.